Good morning. Markets overnight. Well, what a surprise for the markets, with the FOMC meeting deciding to keep the bond buying program as is rather than taper it. Markets reacted violently, with the Dow and the S&P spiking higher, setting fresh new all-time highs. The Dow closing up 0.95%, the S&P closing up 1.22%, and the Nasdaq closing up 1.01%. Asia and Europe will be expected to follow suit today, and already Asian futures are pointing to gains as I write this. The Federal Reserve announced at its meeting that it would continue to buy bonds at the current rate of $85 billion a month. Wall Street had expected a $10 to $15 billion decrease in the program. They also downgraded their outlook for the economy. They expect GDP growth will be in the 2 to 2.3% range this year, down from 2.3 to 2.6% forecast they made earlier in the year. The Fed also cut the 2014 forecast to 2.9 to 3.1% range, from 3 to 3.5%. Treasury yields fell on the news, with the 10-year benchmark falling to 2.76% from 2.86% just prior to the news. Now that the FOMC announcement has occurred, markets will most likely return their focus to the US government and the debt ceiling issues which have arisen yet again. Obama said yesterday, whilst he was speaking at a gathering of CEOs, that Washington is stuck in a stalemate over budgets, debt and healthcare costs, leaving the government unable to function properly. His comments came just half an hour after Speaker John Boehner said that the House Republicans will tie a government funding measure to the ongoing effort to defund the Obamacare healthcare reforms. They will pass a budget bill this week that withholds funding for Obamacare, putting the government close to a shutdown, as Obama has said that he will not sign a bill that defunds Obamacare. The Treasury Department has said that the $16.7 trillion debt limit will be reached in October, and Treasury Secretary Jack Lew said that it will not be raised because it pays for expenditures authorised by Congress. The GOP leadership has said that they will fund the government past September 30th on the condition that the Democrats agree to strip funding from the Affordable Care Act, as I've mentioned above. Keep in mind that if the government shuts down, people won't get their social security checks and troops may not be paid. In economic news, housing starts rose less than expected, and July's housing starts were revised down. Home loan applications, however, rose 11.2% this week. European shares closed higher preceding the FOMC announcement, but off the highs, with the focus entirely on the FOMC minutes. The mixed open in the US caused European markets to fall from the highs of the day. The only news for the session was the MPC vote in the UK, with all Bank of England policymakers voting to keep policy unchanged this month, as an improving economic outlook showed that there was no more stimulus needed. Subsequently, the pound rose on the news. Asian markets yesterday traded mostly higher in anticipation of the FOMC decision, with the Nikkei climbing to a 2-month high. However, the ASX ended lower within range-bound trade. The Nikkei rallied 1.3% yesterday thanks to the weaker yen, boosting the competitive advantage of exporters. Shanghai also ended higher, erasing earlier losses thanks to the rising optimism over Shanghai's planned free trade zone. News today includes the Kiwi, the yen, the Swiss, the pound and the US dollar. Have a great day.